You are watching today's video technical update presented by FXTimes. It is Thursday, September 9th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. The platform I'll be using for this analysis is VT Trader. The euro dollar and the pound dollar pairs show that the greenback is consolidating with these European currencies. This is also seen in the US dollar Japanese yen and the US dollar Swiss franc pairs. The yen is also consolidating, as can be seen in the pound yen and euro yen pairs. However, the US dollar Canadian and the Canadian dollar Japanese yen pairs show that the Loonie is strengthening after the Bank of Canada raised rates. Finally, the Aussie dollar continues to surge towards the 2009-2010 high. This video is being produced at about 11:30 a.m. Eastern Time during the US trading session. Here's the euro dollar, and here is the pound dollar. While there are still some bearish momentum going in the 4-hour time frame, here's the 4-hour. You see the RSI staying below 60. Here, euro dollar 4-hour mainly below 60, but we did have a break above 70 here. So both of these markets are consolidating, as you can see in the 4-hour time frame. So the bearish outlook for the euro dollar here goes to 1.2450, while for the pound dollar it goes down to 1.5120 area, and that is if both pairs stay below their respective resistance area. For the euro dollar, that resistance area is 1.2920 area. Okay, but if the market stays below 1.2820 and actually breaks below this rising support, preferably breaking below 1.2650, then the outlook towards 1.2450 has a better chance. Otherwise, we may see the market continue to consolidate. We have A, B, C. This could have been A, B, and C. We may be in a period of long consolidation for the rest of this weekend to start next week. So look for these two pairs. Look for the resistance and support levels as clues to whether the market will break bullish or bearish. For the bullish outlook, we need to break here. Euro dollar is 1.2920, and for the pound dollar we need to break above 1.56 for the bullish outlook. Otherwise, these areas are treated as resistance. Alright, here's a quick look at the US dollar Japanese yen pair again, and this has been the projection since the top here, since the market failed to break above 86. Now in the 4-hour time frame, we see the market in this ranging action here. We have a swing projection towards 84.30 area, maybe lower. In any case, dollar yen consolidating, and basically if the market starts to break below 83, so this is the area, 83 is this target, and if the market breaks below and fails to come back up, we may be heading towards the all-time low at 79.75. But you see the volatility is drying up for this pair, so uncertainty is there's a lot of uncertainty in the dollar yen. Here you see that if for the bullish case, we need to break this 200 moving average. So for the bearish case to continue, there's not much to there's not many clues we can get except continuing lower highs, negative reversals, your RSI failing to break above 60 and such. But for the bullish mode, it will be very clear when the market breaks above these moving averages. So at the moment, dollar yen, I would be on the sideline. There aren't any major clues. We may have some resistance as the market rallies towards 84.30, then we could look for a decline towards 83 again. Okay, so that's dollar yen. The dollar Swiss franc pair is also consolidating at the 1.01 area. You see we have a few days of very narrow volatility and sideways action. In the 4-hour time frame, you see this here, and now you see a test of the 50 moving average. Basically what we have is continuing consolidation, but with a bearish bias. You have a negative reversal, your RSI is higher, but your price level could not break above this previous high, so we at least test this previous low and maybe if we follow the swing projection, we may even point towards the parity level at 1.00. So dollar Swiss franc, again, just like the dollar yen, these are some clues for further bearish action. They're not very strong because the market has been declining for a long time. So these are very short reward, probably low reward ratio outlooks, but they are probably higher in probability because the market continues to trend downwards. And the only clear clue we can have for the market to have turned bullish is if the RSI here, for example, breaks above 60, sustains that, preferably breaks above 70, and also the price action breaks above these moving averages. So until then, we should keep the bearish outlook, but also keep in mind that we are at, for example, dollar Swiss franc. When we reach this parity level, we are basically at this low here. We could continue lower here towards 0.9650 if the parity level, if the market stays below parity level, we could go to 96.80 area, or maybe 97 area. Okay, so that's dollar Swiss franc. Here's the pound yen and the euro yen pairs. Both are consolidating, but here in the euro yen, if the market fails to go above 50% here, of this consolidation, then we may be in a bearish continuation case, which points to around 104, I believe. Okay, this projection. Pound yen, similar projection, with a string projection to 107.50, and this also failed and it reversed at 128, and the market is consolidating. If the market fails to break above 130.30 area, and basically this previous high here, maybe even 130.40, then the market can still have a bearish attempt to 127.50. Otherwise, the market is in consolidation and may rally further towards this 200 moving average. I mentioned that as the dollar and the yen are consolidating, the Canadian dollar, the Loonie, and the Australian dollar, the Aussie, are gaining. So here is Canadian dollar Japanese yen pair. The market has been in this consolidation, and actually 82 is going to be in a very important area. So if the market stays below 82, we may still be in this consolidation, but the Canadian dollar is gaining, and if it breaks 82 along with this moving average, then we may be starting a bullish outlook. And this may be driven by Bank of England Bank of Canada raising rates. You see, Canadian dollar has been bearish for a while now. Better to look at the daily here. Bearish for a while. So if the market breaks above 82, it has a chance to go to 84.50 before the market reevaluates whether Canadian dollar yen should continue lower. This is an area of resistance as well as a Fibonacci retracement level, and in the middle of your moving averages. Okay, so 84.50 is the next target if 82 breaks. Otherwise, if the 82 area holds, we may continue the range between 82 and 78.50. Continuing with the theme of strong Canadian dollar and Australian dollar, we see here the US dollar Canadian dollar pair decline from this 1.0650 area, this channel resistance area, and since created a double top, we had confirmation. Here's another pullback, and now the market continues lower. As I mentioned, with this topping action confirmed, the market can now head towards the bottom of this range near 1.0150. From the top, we would have anticipated it to return to the middle, but now that the top has been respected, we may continue lower. With the Canadian dollar, Bank of Canada raising rates, we could see Canadian dollar continue even towards parity level, towards this low here in the 2010 low here. Okay, so for our time frame, here's the double top, here's a break. Here's a pullback and the continuation now. Let's see. Now let's move on to Australian dollar. We are nearing the 2009-2010 high here at 0.94, and we have a projection we have a projection towards 0.96 area. Now this projection is this swing projection using the smaller swing projected here. So that's actually a conservative projection, and using this Fibonacci expansion, we measure this first swing and the retracement to the first swing, and then this the rest of this projection, when it goes up to 150 or 61.8%, is at the 0.95 area, 0.9420 to 0.95 area. So this is a logical area for resistance and for this swing to target. Okay, so those are the Australian US dollar and your US dollar Canadian dollar pair, both looking weak for the US dollar. And that wraps it up for today. Thanks again for watching, and good trading.